Hello, Professor Schaefer. We are Group 4, and we're going to be talking to you today about a local Kansas City company, DST Systems Incorporated. We want to begin our presentation of integrated audit by focusing on the calculations of materiality, as well as significant matters to discuss with management, in particular valuation and rights and obligations. In calculating materiality, we use sales as our driver and came to a calculation of 4.5%, or in other words, 100 million. DST's goodwill is monitored for impairment at least annually. Past 3 years, goodwill has not been deemed to be impaired. DST utilizes quantitative assessments that compare the fair value to the net book value. Regarding investments, DST reviews investment securities for impairment based on the qualitative and quantitative criteria, including the extent to which the cost exceeds the fair value, the duration of any market value decline, and the financial health, as well as specific prospects for the issuer. DST tends to record an investment impairment charge for an investment with a gross unrealized holding loss resulting from a decline in the value that is other than temporary. Regarding allowances, allowances for billing adjustments and bad debt expenses are estimated as revenue is recognized. Allowances for billing adjustments are recorded as reductions in the revenue, and bad debt expenses are recorded within costs and expenses. The annual amount for these items are generally immaterial to DST's consolidated financial statements. Evaluation allowance is recorded against the deferred tax assets if, based upon the weight of available evidence, it is more likely than not that some or all of the deferred tax assets will not be realized. In reviewing DST's rights and obligations, we'll be focusing on external regulations, business risk, and inherent risk. In external regulations, DST, like many technology companies today, is being scrutinized for its ability to protect its clients' privacy. As evident by the recent congressional hearings regarding Facebook and its security breaches, there will be renewed focus on IT security, and it is likely that regulators will be implementing new regulations to address the public's concern. We will next review business risks. DST faces similar risks to that of any other competitor, mainly becoming obsolete. Technology changes every day, and DST, with its impending merger, will continue to face this risk. The inherent risk posed to DST is due to its impending merger with SS&C.
Thank you, Jabron. This next slide is going to cover our audit plan and the areas we deem need emphasis. We determined that there are several areas within DST that presented a significant or an elevated amount of risk. Those areas incorporated a mix of inherent and control risk. We identified several. I'll touch on the top 3 on this slide. 1. Revenue. DST's system offers product and services to several different industries, with healthcare being the largest. Revenues from the healthcare industry accounted for almost 25% of the operating revenue for last year. More so, related parties made up a large amount of the revenue, with total top 2 sources accounting for $150.8 million and $150.3 million. A lot of the revenue is contract driven, so there needs to be an emphasis on when performance is complete and when the revenue is actually earned. Number 2, significant acquisitions. DST made several large acquisitions during the year, so treatment of those acquisitions and the consolidation will be areas of emphasis for our audit. Finally, the third point, intangible assets. DST's core business is built around software and other intangible assets. Intangible assets are subjective and based on management valuation and estimates. While testing the internal controls, we identified preventative and detective controls. Their presence provided some comfort around lessening the chances of a misstatement or fraud. Looking at the preventative controls, some of the positive controls we observed were secured buildings with front desk guards, a heightened level of physical security around the data center, Employees also used a one-time password token for logins, and the systems that the employees used, they had different permission settings for different leveled employees. Those different settings also help segregate the duties and break up processes so that one single person wasn't doing from beginning to end. For the detective controls, management plays a vital role in DST success, so that management provides a lot of oversight and governance over the company.
Next, we are going to be talking about DST's financial ratios and pointing out some that are the most important. You will see that DST's current and quick ratios are much lower than the industry average. However, this can be expected since many of the industry's largest competitors, including Microsoft and Oracle, have many other areas of business compared to DST, who just focuses on health and financial services. For example, Microsoft sells various products, whereas DST doesn't have any inventory. Therefore, we can expect there to be a difference in these ratios. Also, although it is not shown in the slide, DST's quick ratio has been increasing annually. Another ratio to note is DST's receivable turnover, which is much lower than the industry average. DST Systems contracts long-term with clients, so some of the receivable items remain open for multiple years. Therefore, we would expect this rate to be lower than other companies. Finally, DST's times interest earned ratio has been consistently higher than the industry's average, which indicates that the company is better able to service its long-term debt than some of its competitors. When researching DST, our group did not find any areas of their financial statements that were materially misstated. However, one area that we identified with a high risk for misstatement is revenue recognition. The reasoning for this concern being that the majority of DST's revenues are derived from computer processing and services, as opposed to the physical sale of inventory. However, the company stated that revenue is recognized upon the completion of services provided. Any billing for services in advance of performance is recorded as deferred revenue. The company also uses 4 criteria to determine when revenue recognition is met. First is that there is persuasive evidence of a contract for services exists. Second, the delivery of those services has occurred. Third, the price for those services is either fixed or determinable. And finally, the collectibility of payment is reasonably assured. These criteria help the company to ensure that revenue is being recognized at the appropriate time.
After completing the audit, in our opinion, the financial statements give a true and fair view of the financial position of DST. So we have decided to issue an unqualified opinion. No material misstatements were detected. The company is operating in accordance with the GAAP, so financial statements and records all comply with the accounting standards stated by the board. Management also implemented all controls and assertions suggested by us to smoothen out the process of the audit procedure and to prevent things like fraud and having misstatements turn out. It was an honor auditing your company this year. Thank you very much.